Now, last November's agreement among the world's biggest oil producers to cut production was meant to help push prices higher, but that deal looks like it could be unraveling. A committee within the OPEC cartel that's monitoring whether producers are sticking to those cuts has not recommended an automatic 6-month extension beyond May. And as a result, oil prices have once again come under pressure. Now, this was the effect of November's output cut on prices. After a 2-year slide, Brent crude surged by around 10% by early December. By the start of the year, prices looked like they were holding firm. That prompted Russia's energy minister, Alexander Novak, to declare that the deal is a success. But by the middle of this month, data showed that US shale oil producers, encouraged by higher prices, were ramping up production again to their highest levels in 2 years. And the world was once again swimming in oil. At their latest meeting in Kuwait on Sunday, 5 OPEC members said they would consider extending the output cuts, but Russia said it was too early to commit to more reductions. And the final statement from the meeting recommended that members review market conditions until next month's meeting in Vienna. So let's go straight to Dubai now, where Robin Mills is waiting for us. He's the CEO of Qamar Energy, a consultancy firm over there. Robin, thanks once again ever so much for joining us on Money Talks. So it looks like we're back to the drawing board, doesn't it? I mean, is this a temporary dip that we're seeing in oil prices, or are we looking at $30 a barrel again?
Well, I think this committee, it's a technical committee, and it doesn't have the political mandate to decide on output cuts continuing. That can only be done by the OPEC meeting that comes up in May. So I think the talk and the analysis of this committee is probably really overreacting to it. It is interesting that they were not able to come to a firm recommendation, but as I said, they didn't have the mandate to do more than make a suggestion.
Yeah, as we head towards this crucial meeting in May, though, it's not looking good. If prices do go back into free fall, just briefly explain to our global audience what that means for the global economy.
Well, it's interesting. We've had a period of low oil prices, which is generally good for the world economy, but it hasn't had the impact that people had expected. Of course, it's been positive for some countries, the major oil importing countries such as Turkey and India and so on. But it hasn't had a major impact, much less impact than it would have done. Economies are much more oil efficient than they used to be. And the US, of course, which was always a big oil importer, is now less so it doesn't get the boost that it used to from lower oil prices.
Right. We are, though, seeing an environment where inflation is coming back up, helped by various other factors, and oil was considered one of those factors. Is that going to dent policy around the world?
If there's a real surge in oil prices, no doubt that will have an effect. But I think just what we're seeing is just how hard it is for OPEC to push up oil prices significantly. They've added a few dollars to the price with this cut. But of course, as you said earlier, we've seen the response of US shale producers being very strong. And so prices have not really surged and don't look likely to. And a few dollars extra on the price, I think the effect on feeding through on global inflation is quite modest.
Robin Mills, CEO of Qamar Energy in Dubai, thank you ever so much.